Breaking records, Vanguard leaves Bitcoin ETF inflows in the dust. Senior ETF analyst Eric Balchunas reveals an astonishing $30 billion influx, 6 times more than Bitcoin ETFs. Stay tuned as we unpack the implications of Vanguard's monumental success in the crypto space as they decide to crash Bitcoin's price. Don't forget to subscribe, like, and share, and let's start. And we're starting off with Bitcoin's weekly in position to have a bullish close inside the resistance area, also in position for the highest weekly close since November 2021. The next one we go for, Bitcoin's breakout confirms what we have been predicting for more than a year now. This train is unstoppable, new all-time high either before or shortly after halving is just the matter of time. Also, Bitcoin is over 50,000 and retail trading volume on Coinbase is still 85% of its high bullish. Retail uptick, Coinbase's consumer trading volume picked up in fourth quarter. Also, we go for saving in Bitcoin means the value of your savings increases over time because Bitcoin is a scarce commodity. This is what leads to deflation on the Bitcoin standard, and a house that would have been worth 1,000 Bitcoins a few years ago costs 8.5 Bitcoins today and will very likely cost less than a Bitcoin in the future. When banks aren't skimming off the top by charging interest, you can save for your future and life gets much cheaper. 74 days till Bitcoin halving, and if you know what's going to happen after the halving. The increase will be massive, but we just gotta get prepared for it. The next only 5 years left until a super bullish Bitcoin weekly candle close. 5 hours, by the way, not years. 5 hours. So that's what we have. Shorts are begging to get destroyed here. 53,000 is coming. TikTok, Bitcoin, we are here. We are getting closer and closer to liquidate those short positions. I don't know if we actually do, but it looks like it might be. But there's still no long position, so it might be true one because there's not many people want to long now as they expect a massive fallback, as a lot of news actually saying that we can go down. Bitcoin is the best performing asset in the last decade. Best performing asset in the last decade, looking at Amazon's 1000%, Tesla's 12,000%, Apple's 700%, S&P 500's 277%, Google's 700%, Microsoft's 1,000, gold with only 9%, and Bitcoin with 569,772%. As more people adopt Bitcoin, it becomes harder to regulate. Governments might be able to stop a few hundred people from running Bitcoin Core on their computers, or maybe even a few thousand, but hundreds of thousands, millions. Bitcoiners already outnumber politicians. Soon, Bitcoiners will be politicians. Do you think someone will intentionally screw themselves over by creating regulations that ban Bitcoin? So, here we go to the main point of the video. Vanguard leaving Bitcoin ETF inflows in the dust. According to Eric Balchunas, a senior ETF analyst, Vanguard has observed approximately $30 billion in inflows since the launch of Bitcoin ETFs, a figure 6 times greater than what Bitcoin ETFs have achieved. This influx underscores Vanguard's dominance in traditional finance TradFi, despite the crypto sector rapid growth and the significant attention Bitcoin ETFs have garnered. Boycott Vanguard flops. Vanguard's steadfast approach to investment, deeply rooted in the principles set forth by its late founder Jack Bogle, has led to a pointed refusal to engage with the cryptocurrency market, including Bitcoin ETFs. This decision sparked considerable debate within the crypto community, culminating in a boycott Vanguard movement on social media platforms. Despite this backlash, Vanguard's position remains unchanged, with the firm pulling even futures-backed Bitcoin funds from its platform. So this move shows Vanguard's commitment to Bogle's vision of investing in assets that generate tangible returns such as dividends and interest payments, and its skepticism towards commodities and assets it views as speculative like cryptocurrencies. Ignoring the hype, Vanguard's conservative stance on investment is not merely a reaction to market trends but a reflection of a deeply ingrained philosophy. The firm's exclusion of cryptos-related products from its offerings is consistent with its focus on long-term long-term value-generating assets over speculative investments. Vanguard's approach is categorized by a rigorous screening process for new products, emphasizing investment merit, client needs, competitive advantage, and feasibility. Despite the allure of blockchain technology and its potential to enhance capital market efficiency, Vanguard remains cautious, prioritizing the interest of its long-term investor base over the speculative nature of current crypto offerings. Also, the spot Bitcoin ETF is a giant mistake, market expert Jim Bianco says. While the broad crypto industry is basking in the euphoria of the spot Bitcoin ETFs, market expert Jim Bianco thinks that the new offerings is a giant mistake. Bitcoin ETF is a giant mistake. President and macro strategist at Bianco Research LC, Jim Bianco, has expressed his displeasure about the launch of spot Bitcoin ETFs. Amidst this criticism, he spoke highly of the prospects of decentralized finance as an alternative in a financial landscape, and he also pointed out that the Bitcoin ETF product can produce higher prices for the flagship cryptocurrency Bitcoin, but not up to $1 million as predicted by Bitcoin stock-to-flow model creator Plan B. Bianco referred to spot Bitcoin ETFs as an admission of failure, citing that it was a way of sucking crypto into the current system. For that macro strategist, achieving up to $1 million for Bitcoin price will require that a system brings force innovation or even come up with an alternative system. Ultimately, he sees the spot Bitcoin ETF as a way of giving up, plus the fact that the Securities and Exchange Commission may turn against the offering in the future like it did with gold. So spot Bitcoin ETF flourishing. Bianco's sentiment comes at a time when we spot that the spot Bitcoin ETF market is outperforming many other assets in the financial market, and it recently outranked the 3,400 existing ETFs with a weekly inflow of up to $2.3 billion. On a Friday, spot Bitcoin ETF saw a 323 million in net inflows, and considering the total net inflow that the system has seen, up to 100,000 Bitcoins have moved into spot Bitcoin ETF since launch. Only BlackRock's IBIT has recorded up to 5 billion in net flows, far outperforming its peers. Looking at the volume of inflows registered by BlackRock and Fidelity, it is obvious that the two asset management firms are leading the Bitcoin ETF market, giving the industry a major leap comparable to the broader financial market ETFs, as Grayscale is still grappling with the volume of outflows from its GBTC, as these outflows have raised several questions in the minds of crypto enthusiasts, but in the last few days, the outflows from the firm's Bitcoin ETF have started slowing down. Also, the Rich Dad Poor Dad author Robert Kiyosaki predicts gains for Bitcoin crash for gold. As Rich Dad Poor Dad author Robert Kiyosaki foresees a shakeup in the US economy that will trigger massive price spikes for Bitcoin and silver, while gold will crash below 1200. Kiyosaki also calls for more Bitcoin adoption, as Kiyosaki on the social media platform X raised a question about the US economy and the sustainability of the US bonds. He foresees a gold crash with the potential of breaking below $1,200, as silver and Bitcoin are expected to record significant gains, as this attitude is consistent with Kiyosaki's earlier warnings about the biggest crash in history, which he spoke of in his book Rich Dad's Prophecy. So that's kind of all the information we got on the Bitcoin so far, and if you're interested in more, don't forget to subscribe, like, and share. See you in the next one, and peace.